Some breaking news earlier this hour. Dick's Sporting Goods is buying Foot Locker for $24 a share. Courtney Reagan is here with all of the rather juicy details, Courtney.
Yeah, obviously. So this one was rumored sort of late last night, and we obviously can confirm now that this is true. And I spoke with Dick's Sporting Goods executive chairman Ed Stack. He's also the son of the founder of the company, about the retailer's deal to buy Foot Locker. Ed Stack told me, look, it gives us a much deeper relationship with the key brands that we do business with: Nike, Adidas, On Running, all of them. And that footwear is the engine that pulls the train for Dick's Sporting Goods. Now, Stack recognizes Foot Locker's challenges, largely exacerbated by Nike's previous decision to pull back on inventory at retail partners as it pursued its own direct-to-consumer strategy. That strategy, however, has since been reversed at Nike. And Stack said, quote, "We think our expertise from an executional and operational standpoint and that know-how can help get Foot Locker back to where it should be in the industry." He added, Foot Locker was the place where they sold the coolest shoes, had the coolest employees, and they sold them to the coolest kids who really wrote the narrative about what was cool in this country and around the world. And that footwear is the engine that pulls the train for Dick's Sporting Goods, and he thinks that, again, he can get Foot Locker back to that. He also called out benefits to Foot Locker's international presence. Remember, Dick's is not international. He also said, look, Foot Locker has stores in areas that are going to be harder for Dick's to find enough space and the right economics to put in its own stores. Now, the intention is to run Foot Locker as its own business with its own branding. Stack said he thinks the world of the team at Foot Locker and that Mary Dillon will remain CEO of Foot Locker, at least through the integration. And then after that, she and Stack will, quote, talk about what she wants to do. Now, what Stack wants Dick's Sporting Goods shareholders to know is that there's already been an internal intention to not let this deal distract from Dick's Sporting Goods' main strategies, which he says are gaining momentum as the retailer also pre-announces quarterly comparable sales up north of 4% today. Now, there's a small team at Dick's that's been retasked to focus on bringing the Foot Locker business in. Stack is going to be the one that is leading that team.
It's so impressive because Dick's was $119 stock in 2021.
Yeah.
And a lot of it, we've mentioned other, high watermarks. Mm-hmm. Dick's today is now 209 before the deal. I mean, they've done incredibly well in the post-COVID period. So they're coming from a position of strength. You think investors might give them the benefit of the doubt. The shares are off their lows this morning, down 17, now down about 13%, right. But they still seem to have some concerns.
Yeah, absolutely. And I think, look, whenever you look at deals like this, usually the acquirer is the one that takes it on the chin a little bit in the early going. Certainly, if you look at Foot Locker's business in the past, maybe you could say they got it for a deal. But of course, is it going to be accretive? Stack thinks it will be in the first full year. He's not giving those estimates quite yet. He says there's going to be some synergies. He thinks maybe between $125 million, but again, does intend to continue running these as separate businesses, kind of a bolt-on. The international presence, though, does seem to be an opportunity he's looking at. He says there's a total addressable market there of about $300 billion, which they're not getting any of right now.
And you mentioned the whole Nike thing.
Yeah.
In many ways, at the heart of this, they pulled back from those partners. That Foot Locker had a really hard time without that inventory, but Nike is now making an about face, are they not? Are they going back to the... So
they are, and that is sort of what we discussed here. So they are making an about face. They're realizing that those retail partnerships are still powerful. Unfortunately, I think some of the damage had been done.
Are they going to be back in the Foot Locker channel?
Yes.
Yes. I mean, look, that could... I always try to think, if Warren Buffett were buying the company, would we say, wow, this is genius,
Yeah.
And should we give Dick's the benefit of the doubt here? Maybe they realize a similar opportunity.
Right. And one of the analyst notes, I think, when this deal was at least speculated, noted something, and I think I want to get these numbers right, saying that Nike represents about 24% right now, but with this deal would be as much as 38% of the inventory. So depending on how you view that from Nike, is that a good thing or a bad thing?
Right.
That does sort of change that calculus there,
in the middle of its own turnaround.
Right.
Very interesting. Thank you for bringing us, especially those comments, Courtney, from the CEO of Dick's. Appreciate it. With the shares still down 13% pre-market.